Right, so now that we are recording officially, I must say it is now Thursday, May 14th, 2020, 8 to 8 p.m. And here tonight, we are going to be focusing on trading. I have about 3 new persons on this call, persons who haven't yet started trading, but just so that they can get an idea as to what the trading is all about and how we go ahead doing that, and also the support that we provide. Again, if you have any questions, you can just put it in the chat box or you can raise your hand and we are going to take those questions. So throughout the sessions, we are also going to be entertaining questions. Just give me 5 seconds to just disable audio in the background here so it will not disturb. Right, good. So we are getting there. Let me share my screen and let's get going. So I'm going to share my desktop. All right, once you can see my screen, finally, if you can see my screen, put 4 in the chat and we go right ahead. You can check if you can see my screen, put 4 in the chat. Just type the number 4 if you can see my screen. I want to make sure that we are, all right, so I'm seeing some 4s. It means that we are good. Right. Okay. So once again, welcome everyone. And this is going to be something we're going to make, or we're going to do on a regular basis. The whole objective of doing this, so it's really so that we can maximize our entry. For many of us who would have joined the academy provides all the tutoring that we need so that we can get into the trade, get out of the trade at the opportune time. We had the scanner, we had many tools. Some persons are subscribed to Gold Cup, to Swipe Coin, to those signal apps that tell you exactly when to get into the market. But at the end of it all, it doesn't matter what tool there is. The market carries one basic principle. So there are times you look at some of the educators and when you see the way the charts are marked up, you realize, no, this thing is too complicated. That's not for me. At the end of the day, nothing is as simple as simple. So the whole aspect about trading, because you get on the trading platform here, the market doesn't care if you use any tools to analyze it. If you are doing the right thing, the market behaves just the way that it is going to behave. And the way the market behaves, the market goes up, it goes down, it goes sideways. So it doesn't matter what tool you use. Yes, the signals are good. Some of the indicators, they are very beneficial, but at the end of the day, they still pull all the data, all the statistics, all the indicators. The algorithm comes from the basic principle of what we're going to be doing here. So at the end of the day, all you really need when it comes to trading, it's really a clean chart. Sometimes we draw this line, we have to understand what things are like support and resistance and all those things. But those things come in eventually. So when it comes for starting, everybody on this platform should subscribe or have an account on TradingView. So here we have tradingview.com and we have an account on TradingView. Why TradingView? Because TradingView affords us the ability to do a lot of analysis. We can mark our charts. We can keep the settings on the chart. Just as we have the color coding here, we can color code our currency and we can do a lot from there. Do all our trend lines and so. Some of the other applications that we use, like the MetaTrader, you can't do a lot of those things inside of the MetaTrader. So the TradingView app allows us to do quite a lot. So this is why we use TradingView. And if you follow from the academy, TradingView is the app that most, if not all of the educators use whenever they do their analysis. Again, there are some things that we have to look for when it comes to trading. Sometimes you may be short on time and you decide, here's what, I want to do a trade. I have maybe about 10 or 15 minutes before I leave the house. So let me go and see and look for a trade and do that. It's not about this. When it comes to trading, the mindset is very important. You also need to ensure 90% of the time should be spent analyzing the market. And the next 10% really should be spent to place the trade. So if you properly analyze the market, there are times you sit and it takes you an hour, it takes you more than that before you actually place a trade, because it's not just, I need to place a trade, I need to place a trade. Bearing in mind, the best trade is no trade at all. When you don't trade, you save your money. So whenever you get into a trade, you should have the confidence. Here's what the trade is going to go in the direction in which I want it to go. And then that's why I get into a trade. So every time we enter we enter the trade with the intention that we are going to be successful in that trade. Hence, we do our proper analysis, we do our proper risk, where we do our stop loss and our take profit. And those things aren't just arbitrarily done like that. When we put our stop loss and our take profit, those things are mathematically calculated. So again, for those of you who, based on who your broker is, TradingView allows you to connect your brokerage account to the app itself. I know for a fact, for example, if your broker is FXCM, you can integrate FXCM into TradingView. And when you do your analysis on TradingView, you can actually place your trade right inside TradingView. For most of us who have our brokers as IC Markets or Hot Forex or Easy Forex or one of those other brokers that cannot connect to the TradingView app, we do our analysis here, and then we go to our MetaTrader where we can place our trade. So this again is a twofold purpose. A lot of persons would do it on their phone. Again, for me, I believe the mobile phones or even the tablets, they're really for monitoring trade. If you want to monitor a trade or close a trade, but actually you can't really do much analysis on it. If you have an app that gives you a signal, or you get a signal from the WhatsApp group that says buy this or sell this, then okay, the mobile is good for that. But when it comes to sitting to analyze and to be independent, it's impossible to really do that on a mobile device. And again, MetaTrader 4, MetaTrader 5, you can't do a lot of those things you can do as well as you can do them using the TradingView app. So this is my MetaTrader platform, and I'm looking at this currency. So I'm about to do a trade. So I'm tonight we're working as though like I am doing a trade and you're not there. What I'm going to do, there are some things that we're going to do. So I'm going to get to my trading view, and I just pull that currency. That's where I just open it up on GBP, JPY. And this can be done on any currency pair. Again, it follows the basic principle. The market moves down, the market moves up, down, up. So all of us on this platform here now tonight, we know what the trading is all about. What we need to do is to become independent traders, where we don't wait for signals from someone or some app, but we can take the trades ourselves. And I'm hoping that at the end of tonight, we're going to have more confidence in terms of taking trades for ourselves. But we have to be familiarized with this here. So let's begin. The history of any currency pair is very important. Again, you see, I can stretch this out because TradingView allows me to do that. It is very important that we know the history of currencies. So we should not just be trading and say, here's what. Anyway, I see the trade, I want to take 5, 6, 10 currency pair. It is important that we master or we learn the behavior of maybe 3 or 4 currency pair for a start. Let's not just get too much. I mean, you see, I have a whole list on the side here. But those with the red markings are those that I trade most of the time. So you don't get too confused in terms of the behavior, because there are some currency that they move the same with various pairs. So you might be looking at the Euro GBP, which moves the same as the Euro NZD, and some of them, they relate together. So when one rises, the other does the same. So we sort of try to understand some of the currency pairs. But what history does is very important. So for example, I am, okay, one second. Hello? All right. Sorry about this. Okay, well, I've gotten disconnected again. If you can hear me, put 2 in the chat, please. I just got disconnected. All right, good. So we're back. All right. So my screen is there. All right. So, okay, good. So we are there. We are back. Sorry about this. Good. Right. So I'm saying the history is very important. Let me just delete, let me just clear the chat. So, all right. So the history is very important because what we're going to realize, trading the market, it repeats itself. So I can go back here, May. Let me go back. So let's just go back build. Let's look at this here. So we're going back and forth. So since 2019, I'm going to do, 1 second, I'm going to draw a horizontal line which I can move around, right? So this red line you're seeing here, it shows that at various times the market, there are some key points, some support and resistance zone. So if you look at this line here where the cursor is going, I'm going to bring that that horizontal line here. At when price reaches that level, this is a zone that the market respects. It bounces off from it. So we have some support here when it's coming down here. So it tells us something that here's what, as much as we're watching current price, historically, it is important that we note what would have happened before because there are some zones when things happen. So this is a zone when things would have happened before. Here again, right here, is also a zone around here where things happen. That's way back in 2019, November 2018. Look at this one here, 2019, something happened around that zone. Here, over here, we have in December 2019, and even we coming now, January this year. We look at February, January this year coming into February. This is a zone that whenever the market gets there, something happens. I can move that again to identify this other zone down here. So it's very important that we look at the history because the history tells us some of the things that happen in particular zone and particular times. So we know for a fact when we're trading, we always trade with the trend, right? And the trend is very important. Trading with the trend means we always go in the direction of the trend. So the very first thing we do is to find out what trend the market is on. And remembering always the higher time frame is always the master of what is going on. Yes, the news move the market, but the news doesn't change anything in terms of the direction of the market. What the news does, the news accelerates what happens. So there are times the market might be moving in an upward direction and based on the news come, it makes a spike downwards. It might just happen instantly. But what's going to happen? The market is going to resume where it was and it's going to continue. So the news basically accelerates what happens. But the market moves on the trend here. So the higher time frame, again here, that's my time frame. I'm looking at the one or the day. So I'm going to go and see what a week looks like, what the time frame looks for in the 1 week. So I can see here, let me just delete this here. For the week, this currency, the last 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks at least. The last 6 weeks, the market is on a downward movement. So I'm going to draw a trend line that shows the direction in which the market moves. So I'm going to put my trend line here. Remember tonight we're doing trend lines, right? So this is at the top of the week here and I come down. I'm just touching the week just to establish where the market moves. So this is my major trend line. It comes at the top of this week here, right to the top of this other week. Again, when we do trend lines, it is important that we do it correctly. Meaning, trend lines always go to the right side of price. Trend line always go to the right side of price. If you have any question, you can unmute yourself and you can ask your question at any time. Trend line goes to the right side of price. So if I take this trend line and I put it below here, to see that here, this is incorrect. So you're going to be analyzing the market in the wrong fashion. Trend line always go towards the right side of price. So this, I'm on the week time frame, and this trend line shows that the price is below that trend line. So it means we are going on a sell. The market is moving down. Fine. So I only use the wick to determine the price. Remember to determine the trend. The higher time frame is master of the market. So I move from 1 week and I'm going to go down to 1 day. Now that I'm going down to 1 day, I can see things happening. More things are happening here now. Even in these 2 days here, I can see these 2 days, the market would have crossed the trend line. Again, if it's in a downtrend, once the price stays below the trend line, we continue on that trend. Whenever the price breaks the trend line, again, the market changes direction. If we're going for a buy, the same thing happens, but the direction is just on the opposite side. Question at any time if you wish. So I'm still saying, yes, go ahead. Somebody's asking a question.
All right, so you said trend line should be placed on the right. So what if it's an uptrend? Is that going to be on the right or on the left?
Your volume is a little bit low. I heard you, but okay. So here's what. So because price is always to the trend line is always to the right side of price. So here's what. This is the right side. So this here, the price is below, so the price is going down. Just look at it in that fashion. The trend, because it's a downtrend, that line, that trend line is trying to keep the price down. It's pushing down on the price. So it's a downtrend. Whenever the price breaks it, the direction is going to change, as we're going to see that in a while. So it goes towards the right side of the price. This is how it goes. In an uptrend, I'm going to show you, this is an uptrend here. This here is an uptrend. Again, it goes towards the right side of price. And what is going to happen? This trend line, because it's an uptrend, is trying to keep the price up. Just think of it like that here. So in the downtrend on this one, it is trying to keep the price down, and the price it is acting here as a resistance for the price. So the price is trying to come up above it, but it's trying to keep the price down. Whenever the price breaks that resistance, breaks the trend line, it is because the direction is changing. On this one here, where it's an uptrend, it's trying to keep the price up. So the price is above the trend line. So for an uptrend, the price is above the trend line. Whenever the price breaks the trend line, the trend changes. This again is in the daily, so every candle represents 1 day. Remember, we're trading and we're trading in real time. So this again, we're establishing the trend and to see the pattern, to see where we're going. So here we have an uptrend for a few days, and then we went into a downtrend. But here's what. We were going up, but as soon as the price broke this trend line, look at what happened. What happened here? As soon as the price broke the trend line on this candle, it changed into a downtrend for a little while. It consolidated a little, but then again it went up, which we're going to see as we go into a lower time frame. So the higher time frame is really to establish trends, but we always go in the lower time frame so that we can make our move. Bearing in mind that this point is where the current price is, 132.259. This is where the current price is. Again, we can zoom in to see what happened. Here, which was since in October last year, when the price got to that level, let me just do a horizontal line to explain this. Horizontal line. So this line is directly on the current price. Right there is where the price is. Over here, so that's where we are today. But if we go back to October 2019, we can see when the price reached at that level, the price stayed there for a while. So we expect it to settle around here for a while again. Over here, we go back to September, the same thing happened. We can go back previously to see what would have happened. Look at this long spike we would have had here since January 2019. When the market got at that price, the market reversed. So we can see many times the market is coming down, it got to that price, it reverses. And this is for us to bear in mind. So this historical data here is very important for us. Look at over here. The market came down, around that zone, things happen. Either the price reverses, or if it breaks through, when it comes back, this is a zone for us to consider. So let's get back in a moment where we are. So we're on the daily. I'm going to move from the daily because we know it's a downtrend, and let us see what happens in the 4 hours. in that 4 hour, which gives a lot more details than the daily. So you look at my trend line here. I'm going to go back and show you something again. On the daily, look at the trend line here. 2 candles would have passed above the trend line on the daily, but still we're below because we're in a downtrend, right? So this was just a pullback. It was a large pullback here, and then it came back down on the downtrend. So let's go back in the 4 hours and see. A lot more is happening in the 4 hours, right? So this is in the 4 hours. We see the price came down, the price went up, it consolidated for a while, it went down, and it is going up, and this is where the price is currently on that red line there. So how can trend line help me at that point? I'm going to make the candles a little smaller so we can draw some trend lines to see exactly what's going on. This again, this blue line is our larger time frame. So we know price is below that, it's a downtrend. That's our weekly time frame. So we know now the price, let me remove this line. The price is below this weekly trend line. So we know it's still a downtrend. Even though we see these candles going up, we know it is still in a downtrend. And when it goes up, what happened? It is really because it's a pullback. The price is pulling back for a while before it goes back in the direction of the trend. So let's just do some analysis here. Let's do some trend line and see what would have happened in history. So I'm going to draw a trend line back here and let's see what happens. So we try to touch the top of many candles as we possibly can. So we can see here, the price was below this trend line. So we're still in a downtrend. So imagine you're up here and you're sold. The price goes down and down and down, fine. It goes down, it keeps going down, the price is coming back up. We are still in the trade. But look at what happened. As soon as price breaks the trend line, the market reverses into an uptrend. So we have to constantly be drawing our trend lines. And once we realize the price would have broken the trend line, then we know the market is changing direction. Look again, let's just move this over to that side here. Let's take it over here. I'm going to adjust this for a while. All right, so let's just get a few touches on the candles. Good. So we're looking on the downtrend because we're trading on the downtrend. So right here, we realize we're still in a downtrend. The price is below the trend line. So we stay in that trade. As soon as price breaks the trend line, we know the market is changing. It is time for us to get out of that trade. But here's what. When do we get into a trade? Let's suppose that we're looking at a trade and we realize, here's what. I missed the trade. Should I just jump in, although it's a downtrend? So let us just suppose that you were trading. And when you get in and you open your application, you realize here's what the market is on this candle here, for example. This red candle here. You don't just jump into that trade. You are going to wait until the market reverses. So let me just zoom up and make it a little bigger so you're going to understand what I'm saying here. So even though we are in a downtrend, the market doesn't just keep going down and down and down. There are pullbacks. So we see it was going down. It closed here. It opened here. After it opened here, it went down. We can see the top of this week, which meant it spiked up back there. There was a pullback here, but the market closed. It came down and the market closed at that level down here. And we go on. So let's suppose you are right here when you turn the computer on and decide to get into a trade. You should not enter that trade, although you have drawn your trend line. So mind you, these candles here don't exist as yet, right? From this long candle here, let's just imagine from here to the end doesn't exist. So all we have is that red candle only here. That's our last candle. What we're going to realize here is what? I'm going to wait until that candle pulls back before I enter the trade. When the next candle is formed, we see it pull back close to the trend line. When it gets close to the trend line, we can enter in that for ourselves. This candle came down again. After it came down, so we always wait for the formation of another candle. When it closed here, when the candle reached here, it pushed back up to that point. We waited. Look at this other red candle. It went right back up to the trend line, and then it went down. So all this are in profit here. We got to that point down here, to the bottom of that week. We're going to still wait before we enter that trade. Let's see what happens. There was a pullback here on this candle. So we always enter the trade when we have the market pulling back before it goes down. If it's an uptrend, the opposite holds. Let's see. So the market came down all the way. So you're in that trade, you're still in that trade. It pulled back, you're still in that trade. It came down, it pulled back a little, you're still in that trade. And what you use to determine the trade when you get in or get out of the trade is actually the trend line. Now you realize this candle is formed, it is still below the trend line, you stay in the trade. This other candle is formed. What happened? It is below the trend line, you still stay in the trade. This candle is formed. This candle is formed. When you see this candle is being formed here, it starts to pull back. You're still in the trade because you're below the trend line. But when you realize the candle crosses the trend line, it is time for you to get out of the trade. Why? Although the major trend line is a downtrend, what's going to happen is going to be on a pullback. So once you realize that it crosses here, you have two options. One, apart from getting out of the trade, should I take a trade on the pullback, or do I wait for it to complete the pullback and then go for the sell? So we can also draw another trend line. Let's draw another trend line. So imagine we got out of the trade here and things that happening. It pulled back, it came down a little, but the constantly is going up. So we decide here's what. Let's draw another trend line to see what's happening, what's taking place. We'll do another trend line. Let's forget the other candles here. At the bottom, bearing in mind this candle here, let me just change it. Let me change the color. This red candle here is our weekly time frame. So we know our major trend is down. But we're looking at this candle here now because we're going for an uptrend to see what happens. The market is going up. There is a pullback. Again, it went a little higher. There is a pullback. It is going up. The market went up. We're still in the uptrend. So remember, our major trend is down. But this here is when it gives what we call the pullback. So if you want to trade the pullback, if you're using this method where we are using the trend lines, you can trade the market both ways and be successful. Remember, our major trend line, we always trade with the trend, and this is down. But because we are using our trend lines, whenever the market changes direction, we can make money on it straight away. So we can spend the whole day on this GBP, JPY and make all our money on it. It goes up, we make money. It goes down, we make money. So we draw our trend line for going up. So let's just suppose that only these candles here were formed. All the others weren't formed yet. We're staying in the trade, we're going up and we're going up. If it breaks this major trend line, then we know we're looking for a serious change. But because our larger time frame, which is a week, is still a downtrend, anything happens here is still going to be a downtrend. It wouldn't just change trend instantly like that. What we're going to see happening is some little pullbacks on that trend. So we're going again and we're still in the trade. It went up, it come down. We're still above, but look at what happened. So it broke the trend line here. But even if I broke the trend line, the next candle that formed here went up again. But the shape of the candle also is very important. It gives you an idea as to who's in control, be the buyers or the sellers. But look at what happened. When this candle finally broke and formed outside of the trend line, the market would have changed. It pulled back up to the major trend line, but then the market went for a down. So now that the market is selling, the market is going down. So we would have gotten out of the trade once we realize that the market would have broken the trend line. We get out of the trade. And we're looking now, it's going to go down. So we're looking for a sell. So then once it breaks the trend line here, we can get into the market for a sell. We realize it is moving, so it pulls closer to the trend line and we get in for a sell. What do we do when we get in for a sell? We draw another trend line again coming down for the sell. Let me just make this, okay? So again, all these other candles here weren't formed as yet. So let's just say we just had these candles coming down here. Just make it a little shorter so we can actually see what's going on. So we get it at the top of the week here. This candle is coming there on the top of this week. And we're moving down here. Good. So that's our downtrend. These candles here weren't formed as yet. So we're looking for a sell here. The market came down and we got into the market here. When it pulled right back to the trend line, it continued coming down again. So we're still in the sell here. It pulled back a little. We're still in the sell because we're under the trend line. We're going to lose some profits here because it pulled back a little. But when we realize the other candle would have broken the trend line, it started going up for a little. If you're in the trade, you can still stay in the trade because the major trend line says it's a downtrend. But this is what we can do when we are doing that. But this is in the 4 hours, right? But this is not when we're trading daily. I'm just using this 4-hour time frame just to show you what happens with the trend line. So really, we go down to the 1 hour. Let's see what happens in the 1 hour. A lot more things are happening in the 1 hour than in the 4 hours that we can see. This is where you do all your major analysis inside here now for you to actually participate in that trade. So we can see more things are happening here. So we look at a downtrend here. So we are here. Let's take it from the top here and let's just pull it, that trend line down here. What we see happening, as long as price stay below here, we're in the downtrend. As soon as price breaks the trend line, we get out of the trade because then the price is going up. We can also realize here's what I'm going to take a trade when it's going up and I can trade on the uptrend. But once the price breaks the uptrend, I know the price is coming down. Anywhere the price breaks the trend line. So this is here, we see, okay, fine, we're coming down on that, we're coming on a downtrend. We're on a downtrend. From the top of this week, come down here. That's a downtrend. So the price is coming down. As soon as the price breaks the downtrend, the price going up. But the price is still below that major trend line. So even if it pull back and go negative, we don't just jump out of the trade because you know it's still below this line here. So we are still in a downtrend. And really, this is how the market goes. But apart from doing this, so let's go to exactly where the price is. This again is a downtrend. As soon as the price breaks the downtrend, it went up. When it ends the uptrend, let me show you exactly. So price is coming down. Just see that point here. Price is below the trend line. As soon as it breaks, it starts going up. Price this size, okay, is going up. Let's see what happens. Randomly, I'm just showing you the principle of the trend line here. So it was going up, and as soon as the price breaks that up trend line here, the price keep coming down. All the time, that's the principle of the market. But here's what. Let us get to where, let's clear this chart. Remove drawing. So we get rid of all the drawing on the chart here. This is where price is. So we can see that the market here is in an up. Remember, it's a downtrend, but now at the current state of the market, we can see the market has been going up, which we call the pullback because really it's a downtrend that the market is going in here. So we get some touches here on a few of the candles. Candle 1, the touch here. The market pulled down close to the candle, close to our trend line. Let's make it a little bigger. So this is on the pullback is going up. So we're still staying in that trade. This candle is still above the trend line, so we're in that trade. This candle is above the trend line, so we're still in the buy and we're going up. It made a huge spike up. We're still in that trade. It made a little pullback down here, but it's above the trend line. We are not getting out of that trade. We are here. And still what we see going on, and remember, this is the current price right now. So it is still above the trend line. So it is possible that it can continue going up based on the trend line principle. However, what we also need to consider is price action. What happens when at that zone where the price is, that red line? We've seen right here, whenever the price reaches here, it acts as support for that when it was coming down. So if when it was coming down, that line acted as support, we can go back in history and see what happened. This again, when it's going up, it was resistance for it here. That as a consolidation zone. So remember, for those of, well, we would have all gone through the academy, support and resistance is one and the same. It all depends on the direction in which you're moving. So what can be support now can be resistance later. So even though our current price is here, above the trend line that's showing the pullback, I would get out of the trade if I'm gonna buy right there. Because I realize historically, every time price reaches that particular zone, it changes direction or something happens. It happened right here in May, early in May 20, early, on the 7th of May it happened. We're looking here on the 12th of May, it happened. So even though the price is right here now, two things can happen. Because it would have reached to that consolidation zone right here, it can break that zone and continue going upwards in the buy, or it can very well reach that zone, find the resistance, and come back down because we are already in a downtrend, because our major time frame shows that we are going in a downtrend. So in spite of what the trend is, up or down, trend lines is what determines, or what is the best tool for us to determine when to enter and exit a particular trade. And again, this can work in any currency pair. So I will do this analysis here, and let's suppose that the market was, okay, let me just bring that down a little. Let's just get rid of that line here. All right, so let's suppose that the market was going, let's suppose that the market was here. Let me draw my trend line for up, right? Bearing in mind our major trend line is a downtrend. So all over here hasn't yet happened. So I drew my trend line and the market was going up here. I realized on this candle, the market came down, it touched the trend line. When the next candle was formed, it broke the trend line. I know it's going for a sell. So because I'm doing the analysis on my trading view, I am then going to go, I'm looking at the GBP, JPY. I'm going to go in my MetaTrader, GBP, JPY. I'm going to add GBP, JPY on my MetaTrader, bring it over on the trading flow, and then I'm going to enter that trade here. All right, it's waiting, it's waiting. Yeah, it's just loading up. So again, we do our analysis on the trading view and we carry out our trading on our platform. Right. So our GBP JPY is loading. So I'm going to make that determination. So this here is identical to what we would have seen on the trading view. All right. So it was going up. A trend line would have been right here. And as soon as it broke the trend line, this is on our trading view here. This is on our MetaTrader. This is just a trend line we have here. So all the time it was going up. As soon as the candle broke this trend line, you see what happens? The market start moving down. We can also do another trend line on the downtrend here and see what happens. As soon as the market is coming down, as soon as it broke this trend line, it went for the up here. And the same thing happens here. So this is where we are here now on our pullback here. So again, we are pausing because we realize that that level in the market, something happens at that level. So we're not getting into that trade even right now. We'd have gotten out here on the pullback, made some pips, and we would have waited. So we would place our trade on this here. So we go back to our trading view where we are going to do our analysis. I'm saying on the chat we have here. Okay, no question on the chat. Again, if you have any question, you can write it in the chat or you can unmute yourself and you can ask your question. Right. So we can pull another currency pair and let's see what happens. Let's see if the same principle applies. All right. So this is the AUD JPY. Again, firstly, I will just go down to the 1 week and see what happens. We can see for the last few weeks, it's going in an uptrend. So it was going down for a while. The last few weeks shows here it's going in an uptrend. I'm going to then move from a week into my 1 day to see what happens. That's my 1 day. So this is my larger time frame here that shows in the uptrend. But even in the uptrend, there are some pullbacks, there are some down that's going to be happening inside here. And this is my daily here. I'm going to go down to the 4 hours to see what happens. This is what is happening in the 4-hour time frame. I'm not using the 4-hour time frame to trade. I'm just using it to analyze to know, okay, fine. These are the things that are happening. So when the market gets to that point here, my trend line. So I'm just randomly just drawing some. So the market is just, let's say the market was here. All right. When we draw a trend line, it has to touch candles. I'm just showing you the principle here. When the market breaks that trend line, the market decides it's going to go down. So this is on my 4-hour, but I'm not using the 4-hour here to trade. I'm using it to make the analysis. So I get down to the 1 hour. and see what happens in the 1 hour. This is how the market moves in the 1 hour. Again, the trend line principles apply. Our trend line would have been right below here going up, and as soon as the market, sorry, bottom of this week.
Paul, let me know when I could ask a question there.
Yeah, sure, anytime, you can go ahead.
So once the candlestick breaks the trend line, when we're looking to enter, do we have to wait until the candlestick form in its entirety, or once it breaks, we could enter?
All right. So again, it depends on which time frame you're looking at. Because remember, when we were in the 4-hour time frame, it takes 4 hours for a candle to form, right? So each of these candles represents 4 hours. Again, there are times the market would break the trend line, and the next candle that form, it reverses. So we still wait for confirmation. The shape of the candle tells us a lot of things are happening, right? Based on the shape of the candle, we know here's what the market is about to change. Let me give you an example. When the market goes up, that's when buyers are pushing the market up. Sellers push the market down. So if we want to read that candle here, that candle opened here, and that candle went up all the way up here. So the buyers push the price up here. But here's what happened. Sellers push the price back down here, and it closed at that point here. So realize it's more or less like this here. So the sellers start coming in the market for a while. The next candle was formed here. The buyers push it up here, but then the sellers push it even lower down. That's why it was a red candle. So there's a lot more selling pressure than buying pressure. The buyers again push it up a little higher. But then what happened? The sellers push it down just a little. But look at this red candle. The buyers push it all the way up here, but sellers push it back all the way down. So there was a lot of selling pressure on that. So it's sort of a show a consolidation here. If we look at it, that's the 4 hours. If we look at this exact area here in the 1 hour or 15 minutes, we're going to see a huge consolidation. So consolidation is what's taking place here. Again, the buyers would have pushed it up here. So the candle tells us a story. So even this candle here, which has a long wick at the top, it tells us the market is about to make a little change, or whoever is in control is not so much in control, because the buyers push it up here. But here's what the sellers push it with that long wick. And then we see that other candle that formed was a red candle. That's in the 4-hour time frame. If we were to put this in the 1 hour, if we are going to put this in the 1 hour, we're going to see a lot more things happening here. So, okay, let's just look at that area here. Let's just look at that area, that uptrend area right here. Let's go down to the 1 hour and see what's happening in that time frame here. We are in the 4 hours. All right, so this was our 4 hour. Right, let's just remove this here. So on the 22nd, let's go down the 1 hour. All right. So in that 1 hour, we had some up, and as the candles are getting shorter, we realize there are some resistance. So that whole area here, as I just told you here, is showing more or less consolidation. Price is basically bouncing between that zone. Nothing much is happening here. Although on the 4 hour, it showed you that kind of movement. But really, these two candles are, matter of fact, 1, 2, 3, 4, 5. For that last 20 hours, really, the market was more or less consolidating. So look at that candle here. Here, although it shows you just a downtrend here, it's just a down candle. If we go on the 1 hour, a lot more is happening. And we can see that whole area here is just up and down, and more or less seesaw. So really, it's a consolidation zone. So we have to wait for confirmation, but we do it in a lower time frame. So we look at this here now. So we're in the 1 hour. Let's just make the candles a little taller and see what happens. So we can see a lot more happening in the 1 hour. So in this 1 hour, we realized, okay, that's a pullback. The market is going up, up. Price is come down, but it goes up. Price is below, price is above our trend line. So we stay in the trade here. This candle here, this 1 hour, we're still in the trade. When this candle closes here, this other candle was formed here. Again now, this candle would have broken the trend line. It is still a possibility, even if it went back up and closed on the trend line, it could have continued up, but it's also a signal that the market is changing. So how do we determine that? The market reached at the top of this year, the top of this week, and the market pulled down. So when we have a candle like this, with more wick at the top than the bottom, it indicates that the market is about to change. So the candles tell you a story. Whenever you see the candle like this with a long wick there, even on a downtrend, when it is about to reverse to go on an uptrend, we see the long wick. For example, the market came down right here. We see a long wick at the bottom. Look what happened. The trend changed to an uptrend. We see long wicks at the top. It changed to a downtrend. So the shape of the candle tells us. So for me, if I was in that trade here, Jason, when I saw this candle here pass the trend line, just to be safe, I would exit that trade. We get the other candle. When the other candle is formed, we see exactly what's going on. This other candle, it came down, it went up, but it closed right here. So we have confirmation. So when this other candle forms, we know here's what. This is really a downtrend. The market is changing direction. So we don't just get out from here and say, okay, it's changing trend, let me get in for a sell. We always have patience and wait for confirmation. So even if we waited for that candle to close and for this to form, we still would have been able to catch from here to the bottom, what, 76, 78 pips. So even if we didn't take the trade for the sell here and we waited for this candle to close and we took it at the beginning of this candle to the bottom where the trend where it went here, we'd have collected 77 pips still. So it's not always urgency. As soon as you exit a trade, you get into the other trade. So you can take the day and say, here's what I'm trading only on the Australian Japanese today because I have the time and I'm using trend line. And this is in the 1 hour. However, a lot of things are also happening within that 1 hour. So I'm looking at the 1 hour and I'm confirming this here, but I don't get into a trade on the 1 hour because so many things are happening in the 1 hour. We still go down in a lower time frame. So let's see what the 15 minutes offer. So this again is where we were, right? Let me just make the candles a little taller here. So this a while ago was in the same 1 hour where we were, but now we are looking in the 15 minutes. I'm going to adjust my trend line to touch as many candles, the wicks of many candles, right? Good. So this is my 15 minutes here. So we see in the 15 minutes here, the market went up, it went up here, it made a little pullback. You can get into a trade right here. So if you have to get into trades, the best place to get into a trade, where are you? I'm looking for my up arrow. Good, right. This here is a candle you could have gotten into a trade. This other candle here, we could have gotten into a trade here. Whenever it pulls back down to the trend line. So it's going, we wait, it goes, it's up, we're not getting into the trade. We wait whenever it gives a pullback. So again, it went up, then the market pulled back to that point here. We could have gotten into a trade here. It consolidated for a while all the way here. We could have still gotten into the trade at this point. So we try to get into the trade, the closest point to the trend line once it continues the trend. So we could have gotten into the trade right here and go all the way to the top, and we would have still collected a total of 36 pips if we got into the trade here. So we wait closer to the trend line because here's what was going to happen. If you say, okay, it's going up still and you got into the trade at that point here, trouble. You wouldn't have really made anything because by the time you get into the trade at that point here, it's almost already getting ready to turn, as well as it may make the pullback. So we always wait when the market pulls back to the trend line. And again, the principle says, once it breaks the trend line, we realize the market reverses. And all the time, so we were in the trade for up, we could have gotten here, up, that's fine. But as soon as it broke the trend line here, we would have gotten out of the trade on this candle. So if we got in down here, we'd have collected a lot of pips. So even though we got out here, a little lower than where we were up here, but we're still in profits, and we take the trade on this candle here, we can take it all the way coming down. We will take it coming down here. It broke the trend line. It went up a little on a pullback, but it's still below our major trend line, so we can still stay in the trade. And it went down, it came down, it came down, pull back a little, and it came down. So really, so this is our 15 minutes. But whenever we want the exact point to enter the trade, so let's go right to the current market price and see what happens. Right. So this is our 15 minutes, and we're in that uptrend. The uptrend would have changed a little. So let's just take it from this candle just to see what's happening here. So we are going in the uptrend. Let me move this. Let me adjust this a little. Here. So price was above. We're in the uptrend price. Price is above, fine here. Price is above here. But now that price broke our trend line, we realize now that the prices start going down. We get out of the market here. But this is in our 15 minutes. I would still go down into the 1 minute to see exactly when I should enter the trade. I'm going to extend to make the candles taller. Bearing in mind, all right, so let's just shorten this here. So the low.
Paul, I'd like to ask, hello.
Yeah, go ahead, sure.
When you're finished, I'd like to ask a question.
Yes, go ahead with your question.
Right, so I've been hearing for the longest while, don't be afraid of the pullbacks and so, because when you get confirmation for a sell or buy, whatever it is, there's always pullback in the market. So don't be afraid of a little red and everything like that. But now I'm learning that you say that once you pull your trend line and you find that it's crossing it on a pullback or whatever it is, to get out. I'm kind of a little confused as to.
Okay, all right, good. So here's what. The key in trading is one, never over leverage. So even when the market pulls back and you're going negative, because you know what your major trend line is, you cater, okay, fine, it pulls back into negative, and that's fine, I'm going to leave it. Like for me, I have trades running that I put in since Sunday evening, and it was on a massive pullback, and now it's coming back, and I left it because I know my major time frame, I cater, even though it goes right up to the major time frame, I'm still going to stay in the trade as far negative as it goes, because I know it's going to come back down because the master trend line says it's going in that direction. But look at it. Let's suppose we are in this trade here, and we got in at the bottom here. Okay, let me do another time frame where I can explain it a little more. Let's bring you up. Okay, good, right. That's a good one for a good example. Let's suppose that we got into this trade at that point here. Let me draw a horizontal line to show you here. I got into the trade at this point here, and I go for a buy. So we're going up and we're going up and we're going up, and I got to this point here with $40 on that trade. It pulled back, it came back down here, and I went down to $10. I'm leaving it. It go back up to $30. It come back down to $9. It go back up to $30. It come back down to $9. It go back up to $15. It come back down to $3, and then it go all the way back up, maybe to $50, $60. That is fine. That's kind of trade that we're in here. But imagine you have the time and you sit at the computer and you draw your trend line. And that's a 5 minutes interval. So each candle represents 5 minutes. I got in the trade here and I go with $40. I have my trend line. So I'm going to do my trend line. I'm going to do a trend line. So I got in the trade just at that point here. Right? That's my trend line. $40. I realize it break the trend line. You know what? I get out that trade. Now that I got out the trade, I'm going to do my other trend line because it's going on. I know it's up, I'm going, but I'm going to wait for it. So I collected $40 here already. It broke the trend line. I can get into the trade here again to go back up. I may make $15 here. It broke the trend line to come back down. I close here. That's 40 and 15. That's $55 already. Okay, I let it come down. It come down here. It consolidates for a while. It consolidates. It does its thing. At this point here, I get into the trade again. And from here, when I get into the trade from here, with my trend line, it goes all the way up here, and I collected $100. Here's what. If I would have left it here, from here to up here, I may have collected $60 or $50 because it pullbacks. So there are times all of us, we are in trade and you see, oh, I'm $30 profit. And then here's what, it come all the way to negative 15. It would have meant that you would have lost $30 here. Even though it goes back up in the direction again, yes, you can make $30, but here's what, that's twice you got $30. So that's $60 you could have made. If you have the time, you sit and you walk the trend lines. If you don't have the time, then I understand for many of us who don't have the time. Yes, and Marvin, yes. And even if I didn't see who wrote that, I know that sounds like Marvin. It all depends on the type of trader you are. And again, one person here is saying it is based on the time frame that you're looking at, and that's very true. And this is why we're in the 5 minutes time frame, and that's why I raise it here in the 5 minutes time frame here. If you have the time and they say, here's what, today I'm a scalper, and when I'm scalping, that's what it is. Because a lot of us would say, here's what, I was in a trade and I had $60 or $100, and I leave it and it go back down and hit my stop loss. I should have really take it at that time. So this is where the trend line comes in. So the trend line says I'm going here and it's about to pull back. I am going to close the trade, take the little money that I have. When the pullback ends, I'm going to get into the trade again, take the little money. The pullback ends, I get into the trade. And this we can do on a low time frame. That's why I'm in the 5 minutes. You can do that on the hour, sit for 5 or 6 or 10 hours. If that was on the hour time frame, we're looking at 1, 2, 3, 4, 5, 6, 7, 8 hours. And we can sit 8 hours watching it in that fashion. So we do that then here, Diane, on the lower time frame. We have some time to spare, we can do that. And now these days where the market is behaving in that kind of fashion, scalping can be okay. You know, so you sit with one currency and you can make that money. So yes, John got into the trade down here and John exited the trade at the top. So let's see what pips John collected. He exited the trade up here. John got a total of 34 pips. Look at that, 34 pips. So let's say we are trading $1 per pip. That's $34. So you got into the trade here and you got out from here, you made $34. Unlike me, who decide I am doing it with a trend line strategy. I got into the trade here, up here, I got 23 pips. The market changed, I closed, I got off. So I have $23. I got into the trade here again. I got into the trade here, and I go up here, I got 6 pips. 23 and 6, that's 29. So that's $29. I realized the trend changed here. It went down, it pulled back, it consolidated here. Then again, I got into the trade here. And it went and it closed here. So that's 29 and 26. So that's 49, that's 55. So that's $55 I would have gotten from that trade, as opposed to getting in here and getting out, what does it say? 35 pips thereabout. So we both entered the trade, Diane, at the same place. We exited at the same place, but I could make twice the money because every time I go back down in negative 20, I have to wait for it to climb back up again. This is money that I could have made. Again, this is for scalping if you have the time and you can do that in a lower time frame, not in the 1 hour and those things and then here. So this is why, so here's what you calculate, you know it's going to pull back. So that's fine. You cater for pullback. There, you leave your trade, it pull back and it go. For me, my trade pull back more than 50 times from since I got into it on Sunday. And I'm leaving it because I know what it is. I don't have the time in this lower time frame to get out. There are times you might just sit and you can even pull the 1 minute and say, here's what. Each candle that formed here is formed in 1 minute. And today, I'm taking some 1 minute here. So here's what. This, I realize, this is going on a downtrend. So let's draw the trend line here. And these are 1 minute. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 11 minutes. So I got into the sale here. This candle again shows you the shape of that candle with a long, long wick at the top, tells you that the market is changing direction. And we can see it if we draw the trend line going up, we can see it passing the trend line for a sell. So I'm in the 1 minute and I'm sitting here, and let's see how much pips that would have been. We got into the trade at that point here, and we got out from down here. That's 14 pips. So that's $14 we would have made in that time here. And we exited in that time here. And the market changed direction here, so I'd have gotten in here. And let's see how much pips it would have gone up. So we got into the market here, and we go up here to the top, just here. That's another 11. So 14 and 11, that's 25 pips. The market reversed again, and then the market, after it changed, it broke the trend line, the market decided to come back down again. So you realize, here's what. In 20 minutes, you can collect 60 pips, 80 pips, just by trading with the trend line, getting in and getting out for scalping, if you decide to do that. But the whole objective of this here would be for us, I mean, I use mainly the 1 hour here, because I don't have this time to sit here and do that. So with the 1 hour, we look at the time frame here, we look at our trend line, and this is our trend line here in the 1 hour. And we're still in the market here going up. But here's what TradingView can do. So let's just imagine that we're here. We can set alerts. So when the hours start here, on this one here, you know what? It may come here. So here's what I'm going to do. To know what it is here, I can right click at this price here because we're on this candle. But I know when the other candle form, let me see if it is going to pass this trend line. So I know the next candle is going to be on this grid. So let me just set an alert for a little below this line, below the trend line. So I can right click and I can add an alert here, which is what I do. I add an alert here. It says crossing the trend line. We can leave that here. Because I have the app on my phone, notify me on app or show a pop-up. It pops up on the screen. And I click on create and I'm through that. So I leave the trade, I'm in the trade. I don't have to monitor the trade. If when it gets to that hour here, it passes the trend line and an alert comes on my phone and say, here's what, look at here, alert on AUDJPY, it crossed this. This is what's going to happen. And when I see that, I know it's time to get out of the trade, it's changing trend. I get on my device, wait on my phone, and I close that trade. And I can wait until the next candle forms, and here's what, I'm going to go for a sale on this. So this is what TradingView allows us here also, to add the alerts. But again, we realize this is how the market goes, always with the trend line. So yes, we have the Bollinger Band, we have the harmonic scanner, we have all those other things. What I also use though, to determine currencies that I can trade, I use this site here, live charts here, that gives you the currency strength. It's a currency strength meter. This again, it comes from livecharts.co.uk, right? This gives you an idea as to currencies that you can trade. So we see at this present time, the euro is very, very strong. So something like the euro New Zealand, for example, the euro New Zealand, that's a pair. We expect that this is going to be on an uptrend because the euro is so much stronger than the New Zealand. So we look at something again, for example, like the USD CAD. The USD is a little stronger than the Canadian, so we expect a little consolidation going on at this time. Again, this is a chart that updates periodically. Maybe every hour, every 15 minutes it updates. As things happen, it updates itself here. So we're trading AUD CHF. Both of them are very low volatility. You expect the market to stand up when you look at AUD CHF. Let's verify that. Let's see what happens. Let's see if we can see an AUD CHF and see if we can verify that. AUD CH. Let's see what's going on. AUD CHF. I'm going to add this to the bottom and let's see. Let me just open that and let's see if we can verify this. I have that somewhere. AUD CHF. AUD CHF. We're in a small time frame. Okay, I have the candles like this. So let's see what would have been happening. Let's see the 4 hours. Okay, so that's some movements in the 4 hours. This updates periodically. But let's see what's happening right now. Let's go let's This will happen in half an hour, in the last half hour. So in the last half hour, I mean, each candle represents a half hour. Look at what's going on, even though I extend it. We can see more or less a consolidation has been taking place for the last few hours. This is current price here where we are. So look, consolidation taking place here because let's see from high to low, let's see what the kind of peak is like. So from high to low here. So we have 1 hour, 2 hours, 3 hours. So around this period here, because the chart updates periodically, so I wouldn't do any trade on a currency like this now on the AUD CHF because my strength meter says AUD CHF is low volatility. And again, I said this updates sometime on the hour, 15 minutes, based on as the news go, it updates. So presently, I look at this, it's not a trade to enter, and I can confirm this here because we can see what's going on around here for the last 1, 2, 3, 4, 5, last 6 hours. So for the last 6 hours, what we have, what peak movements we have? 16 pips. So the last 6 hours, the AUD CHF would have moved 16 pips from its highest to its lowest point. So this is not a trade you would have gotten into. So what gives me added confirmation is that currency strength meter. So if I want to trade on something here, okay, the Euro US, you can do a trade on that. You know, the Euro AUD, the Euro CHF, because we expect to see some volatility in that here. So let's see what happens on the Euro CHF. Let's see if I have that on the list here. Well, let me just add that and let's see. So look at some movements, we're in the 30 minutes. Look at some movements, what happened here. So from the lowest to the highest point, lowest to highest point. So we have 14 pips moving inside here. But we can see some more volatility going on this pair than we just saw with the other one. If we look in the 1 hour, that's in the 1 hour view, we can see in the 1 hour view, we can see that kind of movements been happening. And we had some spikes here, even in the last couple hours. And we can confirm this by looking at the currency here. So the Euro against the CHF, and that should be in an upward direction. The market is moving upwards, and there we can see. So you know the market was coming down for a while, it consolidated for a long while, then it went down, but the Euro gained some strength, and what happened? A lot of strength it gained, the market moved up, and look at this big movement here, this again here. So even though we do our analysis, we use other confirmation. So I use the strength meter to give me an idea as to the direction. Again, I use the harmonic scanner to confirm, but many people don't have access to the harmonic scanner. This is why I didn't touch the harmonic scanner tonight. Because it doesn't matter what tool you use, what indicators you use, it boils down to the basic principle of following the trend. The market goes in a particular way, it follows the trend line. Whenever the market breaks the trend line, the direction changes. So we can see that this market here has been going up for a while. Look at this here. We can draw the trend line from the bottom here, and we can go up here. All over here, the market was up. As soon as it broke the trend line, it came down, it consolidated, and it just still stayed below the trend line all the way for the longest while. And this is what it's all about. So the basics of trading here really has to do with mastering the trend line. Again, we start off with the highest time frame, with a higher time frame, the 1 week. That gives you an idea as to the direction the market is moving. So this is how the market has been moving. That's a weekly. So we know we're still in a downtrend. Our large time frame shows that we are in a downtrend, right? So we look at this here, we are in a downtrend, the market is moving down. And we move from the 1 week, we go into the daily and see what happens. All these things are happening day by day, but they are all under the main trend line. So all these things are happening here, but we're still in the downtrend. It came up a little above the trend here, but it is still staying in the downtrend. It is below our major trend line. So we know we're trading sell on this currency. and that's on the daily. So then we go down into, we go into the forwards to see what's happening in the forwards, because now we're getting ready to look for entry here. These are things that are happening in the forwards, but they're all below this trend line. So I can go down into the 1 hour. Let me make the candles a little taller so we see what's going on. This is in the 1 hour, and the 1 hour is way below our major trend line. So here's what, if I got into a trade here for a sell and the market pulls back, I know Dian is going to pull back, but it's going to stay under this trend line. It wouldn't pull back above this. Why? Because I'm looking at the 1 hour, and this is the 1 week. The hour wouldn't just go against the 1 week like that. So the larger time frame is boss over the smaller time frame. So when I get in here, if I do proper leverage, I should be able to handle a pullback. Let's see how much pip is that. Let's measure that and see. You see why leveraging is thing here. Look at that. 10 pips. So if I am trading 0.01, it would have meant that if I enter the trade right here for a sell and it pull all the way back up here, that's just $1 negative. So I'm still safe. So I wouldn't jump out of a trade like that here, because I wouldn't lose so much, because this is below the major trend line. And I see the 1 hour, so I'm looking for an entry. I can go down the 15 minutes. And the 15 minutes now is going to, what I'm doing, I'm looking for entry points into the market. So this is what happened in 15 minutes, it go down. So I'm looking for the current trend here. And this is where price is here now. Bearing in mind, we also have to remember, look at this consolidation zone, the history. The history is very important. We can't rule that out. So if I go back to the 4 hour here to show why the history is important here, this is where price is. I'm going to do a horizontal line on the price. This is the exact place where price is now. And let's go back to the history and see what would have happened. This is a consolidation zone. Let's go back. Price didn't come to that point and that here. Let's see daily, what it looked like with that. The price and that. Okay.
So what you're saying a little bit there is that you can do your take profit before it reaches a consolidation zone. If
Yes,
you
you
understand what I'm
yes. Yes, you can do that. So even when it comes for TP, so here's what, look at where the price is now. And this is daily we're looking at. So we can see that the price has been stagnant on that exact range here for quite a few days. It fluctuates in and between, but this is a point where, so it's not a trade you just get into now. Now it's not a good time to get into that trade, because this is a zone. Look, 1, 2, 3, 4 days. That day here, the price reached at that point here, and then the price stopped. So this is acting here as support. It's trying to come down, but it's not really passing. Even though it passes it, it goes back up. So right now where price is settling there for a while. So we wait to see exactly what happens. When it comes as you ask that, we can raise that here now. How do we set our TP? Because most time we get the signals coming and we say, okay, how do we set? Or do we set our TP?
Question.
Could you repeat?
Did I have a question? I can go ahead.
Yeah, go ahead.
Can you go to the GU, GBP, USD, and on the chat, and also go to the currency strength meter, because when you was giving the analysis, the comparison analysis.
What currency? GBP, USD?
Yeah.
Okay, let's see if we have that inside here. GBP, USD. GBP, USD. Good. All right, so we're on GBP, USD. Good. And we're in the 1 hour view. That's where we are here. Let's see what the currency strength meter says. GBP, USD. The GBP is just a little stronger than the USD, so it may consolidate for a while here, but it favors a little on the upside because the GBP is a little stronger. It's going to pull it up towards it here. So even though we may be in a downtrend at this current time now, because remember this updates very often. at this current time, if it's on a downtrend, it would be in a pullback. So let's see what happens. GBP USD. So let's just see what the major trend is like. So one day it's in a downtrend. Let's come back here. Let's see. 4 hours. So we're still in a downtrend. So just see that trend line from here. So let's get rid of here.
Well, I think we have a different, maybe I'm just refreshing my currency meter page, but
okay,
mine is showing the GBP lower than the
all right,
US.
So let me just refresh my page and see.
Okay.
All right, good. So I was working with a whole one here. But let's just go back before we take this one here. Let's go back to what we have. So the GBP was stronger, right? So right here, because mine was just a little outdated, right? Maybe by some minutes. But when the GBP was stronger, remember we're in a downtrend, right? We're in a downtrend, so the market is moving down. But when the GBP was stronger, remember I told you it's going to be an uptrend, a pullback. This is the pullback we would have just seen when the GBP was stronger. This little one here, this is the pullback we would have seen. But even when we move now and we refresh it here, that's not the tab I want. We refresh it and we see, okay, the GBP USD is going to be, USD is stronger, so it's going to be moving towards the downside because the USD is stronger. It's continuing in the trend. Let's move our time frame. Let's go down to the 1 hour. We start seeing it. So that was the pullback we just saw a while ago when the GBP was stronger. But now the USD is stronger. We start seeing it move going for the downside. Again, we were always on the downtrend, right? We are on the downtrend, but we are in the little pullbacks. So when the GBP got a little stronger, we had these pullbacks appearing. Now the USD is a little stronger. We now come on, we start following the trend and moving along with the trend. So this again is going to go down. And we know it's going down because our larger trend line here shows that the price is below it is going to go down. So yes, we have pullbacks in and between. And it's because the currency is sort of a juggling and changing strength. So in a trade like this, that's in the 1 hour. Let's see what happens in the 15 minutes. This is what's happening now in the 15 minutes. So in the 15 minutes, it is still below the major trend line. Right? So we know it's going in the downtrend. We may have a little pullback. So I can draw here in my 15 minutes. Let me just take it from this candle here and I can draw my trend line touching the top of the candles here. Good. So although this candle here touch a little above it, we're still, the current rate is below here. So I'm still going to stay in that trade. I'm going to stay here. When the next candle forms in 15 minutes, if it forms and it passes the trend line, I know it may be back on it may go on a pullback. But it's still, even if I'm on the trade here and I didn't get a chance to drop out, that's fine. It is going to go back down because our major trend line still says it's a downtrend. So again, as I was saying before, I was about to say before you would have asked the question here. How do we know again now where we're setting our TP and so? So we're looking here, let's just clear the chart. Remove drawings. Right. So let's suppose that I would have gotten into that trade at this point here for a sell. My stop loss is going to be just above the higher point in the time here. So I got through here, I got in the trade at that point. Let me do a horizontal line to show you here. Horizontal line. So I got into the trade at this point here. My stop loss is going to be just above this other high point here because it's possible that the market can move and go up. But because this has gone so far away, it's most likely wouldn't get to that point here with the stop loss here. Again, news can bring it up, but most likely it wouldn't get to that point here. So that's going to be my stop loss. Then I'm going to look again, if I'm looking for my TP, I'm going to go previously. So my previous low here would have been at that point. I can do my TP1 at that point here because that was a low point previously. Some person may want to put it down here, but the market just spiked down here and it went back up here. So I'm going to do my TP1 here. Again, Previously, it went down to that low and the market was that low. So I can do a TP2 at that point. The mistake that some people make, however, in trading is that here's what. I enter the market. Okay, let me just trade from here first. Let's measure to the stop loss. From that point here. So I say we're going to do the stop loss there. And ruler, stay on, please. All right, so that stop loss here would have been 49 pips. It's a huge stop loss, but 49 pips stop loss. So let's say we're trading at 10 cents per pip. That's $4.90 our stop loss, right? But some person may say, well, I have a $10 account now. I don't find $4.90. That will bring me too low. Let me just bring down my stop loss to $2. That's 20 pips. Let's see where 20 pips take us. 20 pips will take us right to that point here, which is in the middle of a candle at moving here. It's obvious if the price goes back, it's going to pass that here. So there are strategic position where price settle that determines where our stop loss is. So price settles, look at that little area here, price settle here for a while. So that's a zone we can use as a stop loss or as a TP based on the direction. Price came at that point here, price settled at that point here. So that could also be a TP or a stop loss based on the direction you're going. So TP and stop loss is calculated not just by the value of the money. And you may say, okay, well, if I follow the stop loss, that's $60 now, but I can risk $60, right? I can't risk $60, but I'm going to just move my stop loss to $20. And then we're going to realize, here's what. No. We're going to have some problems here because it's at a zone where the price didn't stop at all. The price didn't consolidate at any time. So this is why we strategically, so if we're doing TP and so, we can do a TP at this point here. We can do a TP at that point here. So this is how TP and stop loss is calculated. On market high previously and market low previously, we can do that.
Mr. Millet, I have a question.
Yeah.
I remember when you were showing us the scalping before and you say you could get in and get out, get in and get out. When you're doing that, you're not putting TPs, are you?
No, exactly. So when you, just as I was showing previously, how we do the trend lines and then we just take it, so we can trade on the trend, we can trade on the pullback. You don't put TP, and that's again, let's say the 5 minutes time frame, and you have time to sit at the computer. So you don't put a TP because the market can change at any time. But that's when you have time to spare, you can sit and you can do that here. But otherwise, when we don't, we use the 1 hour, for example, like this here, and we draw our trend lines, and we know here's what. This is where I'm going to put my TP. I'm going to do my stop loss in that here because the major trend line shows here's what. I'm going for a sell, so this is what it is. And this is how we structure and we put it in here. But when we're doing those little scalping, we don't put TP.
Right. And what if you had, let's say, not doing the little scalping. Let's say you're looking at a trade and you decided, okay, you realize it's going down and you decide you go for, let's say, a sell, but you didn't have a TP or a stop loss. And a day might run and you have it. But then after, let's say, a day or two, you decide, let me go and put a TP or put a stop loss. How do you do that?
So it's advisable all the time when you're trading, you trade one with proper risk management. And proper risk management goes 2 ways. One, you don't over leverage. You stay within a specified lot size that your account can handle. One, and secondly, you trade with a stop loss, how much you're willing to risk. This is the way to go ahead to do proper trading. Again, as humans, we never like to lose. So many times we realize whenever we put our stop loss, the market just go and hit right our stop loss and the market goes back to the reverse direction. So then we don't do a stop loss. Again, for me, when I trade, there are times I use stop loss, there are times I don't use stop loss. And because I know my larger time frame gives me an idea as to where the market is going, I am more confident. Here is what? I can trade without a stop loss. So I've had some trades in from since Sunday evening. There is no stop loss on them. And if I had put a stop loss on it, it would have passed all the stop loss and closed up the trade. And those trades went all the way negative, and they are pulling back. And now today they move from negative into positive. And if I had put stop loss, as I said, I would have lost on all those trades and them. But again, why didn't I? Because looking at the trend lines and looking at the larger time frame, I know it wouldn't surpass that time frame. But then when we realize we're in trade for quite a while, here's what, you know what, let me just put a TP and put a stop loss, which happens after a while, because you realize, okay, in a trade for 2 weeks, and it's been in negative, and you're just waiting for it to come and break even or whatever. And as soon as it break even, you go close the trade because you realize the trend is changing. So again, what makes you decide? Here's what. So what is going to make me decide that trade has been in a loss for the last 5 days, but I'm stealing it? Why? Because I drew my trend line, and I know even though it's pulling back, the price is below the trend line. But immediately, if that trade breaks the trend line, I know I'm going to close it. So I've been holding on from Sunday to now on those trades, and eventually they bounce back. Why? Because although they pull back, they were below the trend line. But once it passes the trend line, so when I do my stop loss here, I'm going to do it above the trend line. Although there are other ways we calculate stop loss, and the proper way is not to do it in that fashion. But with experience and you're getting in there, you realize, here's what. If I'm using the trend line, I'm going to use the trend line as a guide. So I know once it reaches the trend line, it's an alert, but if it passes the trend line, then it is time for me to get out of that trade and take my losses.
Question,
yeah.
what's your take on twin trading?
On twin trading.
Uh-huh.
So here's what. The only way we can really make money in this Forex trading is doing twin trading. So imagine you are so sure on this trade here, for example. And this trade here, you're trading on an account, let's say $100 account. Let's see how much pips we'd have gotten if we got into the trade here and we exited the trade down here. That's 127 pips. So you're so certain that after you do your analysis, you realize it broke the trend line, and then we are coming down here 127 pips, and I can only trade at 10 cents per point, 10 cents per pip. That means I would have gotten $12.70. Let's round it off to $13. I would have gotten $13 on that trade. I'd have gotten $13. Let's see what our stop loss would have been. That is how we calculate how much trades we can get into. Got in here, my stop loss would have been here at 50 pips. That's $5. So I'm risking $5 to make $30, to make $13. Okay, fine, I'm certain it's going down here. I can do 3 trades, 4 trades. So let's suppose I did 4 trades. That's 13 fours, that's $52. So I can make $52 and risk $20. The thing about it, what happens and the advantage of doing this twin trading, or 3, some might do 4 trades, 5 trades, 6 trades on it here. Let's suppose I did, okay, I'm going to do 4 trades at 10 cents, or 5 trades at 10 cents. That's really 50 cents per pip. As opposed to me doing 1 trade at 50 cents. What's going to happen if I do 4 trades and I realize, here's what, no, the market is sort of a pulling back. You know what? I can close 2 and I can still leave 2 in the hopes that the 2 can help me pull back and recover what I would have made. So I did 4 trades at 5 trades at 10 cents. I closed 2. So yes, I lost that 2, but I still have 3 trades inside. That's 30 cents per pip, which can still pull back and give me some money, as opposed to me doing 1 big trade at 50 cents. When I realize it's at pulling back and I close, I lose everything. So it's always more advisable that you do multiple trades, smaller trades. So in the event you have to close off, even though you're losing, you don't have to close off all at the same time, but again, you maximize on it. So if you say today, I want 50 pips today, you can make 50 pips in 1 trade, but it's going to take a long time. Whereas you can make 50 pips if you do 5 trades at 10 pips each. You are more certain to make 50 pips doing 5 trades than 50 pips doing 1 trade. So that's how we maximize on it. So you don't just do 1 trade and wait until that trade hit TP before you do another trade. So imagine Sunday you do a trade and you don't hit TP until Friday. That's one trade you did for the week. So you can do multiple trades. So once you're sorting, twin trading is the fastest way you can build your account. So you don't over leverage, but you take a lot of small trades. So on a $100 account, you take 2 trades. I'll say 3 trades at 10 cents per pip, which is okay for that size of account, as opposed to taking 1 trade at 50 cents. So you multiply on the monies that you make, and you minimize your risk, because with more trades, you can always close out the smaller ones. And the thing also about it is, what you have to bear in mind is your free margin. So for many of you, when you signed up on the account for your trading with your broker, you did leverage. Some did 1 to 500, 1 to 200. And that comes into play when it comes for your free margin. So the more trades you have inside, the less free margin you have. So if you had a 1 to 500 ratio on your account, it means that if your free margin falls below 500, the broker is going to close off your trades for you. So the trades that is in the most loss, the broker is going to close it off automatically. So even if you don't have a stop loss, the broker is going to close the trade for you. So on a $100 account, you shouldn't take more than 2 or at least 3 10-cent trades. Because if you decide, okay, man, I know the market and I read the market, I can take 10 trades on a $100 account. All 10 of them may be in profit, but the broker is going to close you off because your free margin would have fallen below the level. This again is something you have to bear in mind. So it's not just, oh, all my trades are in profit. Yes, all your trades could be in profit and the broker could just close it. Why? Because your free margin may fall below the level. So gradually, you just have to grow your account. And as your account starts growing, so here's what can happen. And here is the power of twin trading. So I have $200 account and I'm doing 4 trades, 4 of them in profits at 10 cents. And I realize, okay, I have a little money. I make a little $40 on the trade. You know what? I can close 2 trades in profit. It adds more to my equity and I can take 2 other trades bigger than that here. So every time I make a little profit, I close and I increase my equity here that I have, and then I am able to take other trades. So you don't always wait for your trade to hit TP based on how your trading style. So I realize I'm in a trade, for example, the GBP USD, and it reached to a stage where it's just consolidating. I'm in $20 profit already, and that trade just consolidating. 1 hour, 2 hours, 3 hours consolidating. I take the $20 and close that trade and find another pair that's moving. Because you realize your TP for that trade would have been making you $45. And I'm waiting until I get the $45. You may wait for the whole week. So you're better off closing that trade, let that money go into your balance, increase your equity, and find a pair that moves. Because for trading is pips you want. Once you can analyze the market, find pairs that are active. And this is where this meter comes in. That meter tells you those pairs that are active. So I just refreshed again. So the Euro GBP is going to be active. The JPY AUD, these are going to be active. Anything with the NZD, it is going to be active. So this gives you an idea as to which currency to look at. So once you know these are the currencies that are going to be active, GBP USD, this is going to be active. So here's what I'm going to trade GBP USD. If I have a trade on something that is not moving, so I have a trade on the GBP AUD. Right now they're consolidating. The NZD, CAD, they're consolidating. So if I have a trade on that and it didn't profit, I close meeting, take the little profit. Forget TP. I take what I get and I go for a more aggressive one. So now I see the GBP USD, it's moving. You see it's going down. We know that was a downtrend anyways. And look at what's going on. Let me just do the same principle we just did a while ago with our trend line. Let's just do a little something here. All right, so even if we just decided, okay, it's not a proper trend line here based on, let me just, if I can stretch the candles a little so we can get it where we want it here. Because of the long spikes. There are times we can ignore the spikes, right? Because it's just a spike. That doesn't show up anyway. So I was going on these 4 candles here. Red, green, red, green. And I realized this red broke the trend line. That's going for down for a sell. And the pair now is very volatile. So if we had gotten into this sell right here, and this here, we had gotten into that sell right here, it would have meant that we're already going down in profit because this is going down. Our major trend line says it's a downtrend here. and that is the GBP USD. And why? Look at this here. The USD is stronger now than the GBP, so it's going to pull it down. And this is exactly what we see happening over here. GBP USD, it is going to go down. And the larger time frame says it's a downtrend already. So if you get into that trade here, it is going to be for down. Again, if I want to get into that particular trade, I don't just jump in at that point. I mean the 1 hour. Let me see what's happening in the 15 minutes to look for an entry point. That's the 15 minutes here. So I want to get into that trade. I'm going to pull my trend line, top of this week, top of that week here. See what's going on? It's all below the trend line. So I'm going to wait on a pullback before I enter here. So it was going down here. I'm going to wait here. And this is the 15 minutes. But here's what. I can still go down in the 1 minute to get an exact entry point. So let's see what happens in the 1 minute. So in the 1 minute here now, you see it's pulling back in the 1 minute. So if I had stayed in the 5 minutes, I am still waiting for an entry point. Here, you see it's at pulling back here. So it's at pulling back here. So I can get into that trade now. That's only 5 minutes. But to be more precise, I'm going to go down in the 1 minute. And now the 1 minute is showing me here. That's a pullback here. You know what? Let me just watch. And you see that candle that forming, start to form red? If you want to get into the trade, this is a good trade to get into. And if you get into the trade exactly at this moment now, it's not moving down. You should almost ready to make profit here. Fine. It's doing a little pullback here, but this here is an opportune point to get into that trade. And look, it's start moving down. So it's fluctuating there. But right now, you can do a sell on the GBP USD. And if you do a sell on the GBP USD, believe it or not, you are going to be in some profits. So let's suppose we got into the trade here right now, GBP USD. Let us see in the 1 hour. Let us see if we can get a TP. So if you had gotten into the trade right there now, you can get the TP at that point here, 1.21680. Let's see how much pips we would have gotten. If we got into the trade here, if we just enter the trade here and we take that TP, that's 43 pips. So that trade was a good sell trade to get into for 43 pips. And we saw it here. Why? Because we know it's a downtrend. It is a downtrend. And the prices now are still below the current trend line. All these prices are below the down line. It's a heavy downtrend. That's why these prices aren't pulling up close to the trend line. They are way down below the trend line. We know it's a heavy downtrend. So this is a trade you could have gotten into. And for 43 pips, closing at 1.21656 is also a good point for a TP. And what you can do, even if you don't put a TP, you can do a trailing stop loss. So it's going to go down and down and down. We can always go back in history to see how far down that would have gone. And these are very low points. So look at it here. That peak here, which happened a few hours ago, happened way back on the 6th at that point. So this is a point that tells you this is a good place to put a TP. It may not go down lower than that. We can even go back further to see what would have happened. Here. So if you do a trailing stop loss, we can see here's what. This is a point it reach again sometime on March here. So that's where we have our first TP. But you can do a trailing stop loss and you leave it to go down. You don't even bother to put a TP. So once you do the trailing stop loss, you just go down and down and down. And when it pull back, you just take your profit and you end it right there. But this is a trade that is going down the GBP USD. And at present, it's not on the pullback again right now because we saw it pull back for a while ago and it's heading down. Look at what's going on. The candle is almost full. A while ago it had a pullback. We can confirm this if we go back down into the 5 minutes. Let's make the candle here. So the other candle would have formed already. That candle would have completed. And now it's going down. This is what's happening in the 1 minute. So we would have gotten into the pullback again. So we just got in a while ago here. It came down, it made a pullback. So right now it's in a pullback. If we want to enter, we can enter again on the pullback here. We can enter on the pullback here for going down. Look at that little thing that's moving here. As much as the candle looks long, it's not any distance. Remember, that's in the 1 minute. That's just 3 pips pullback, 3 pips pullback. So we can get into that trade here for a sell again. So this is how we use our trend lines to trade in the market. So now, because of this COVID thing that's going on, the market has been very unstable and things happen quite quickly. So we can set our TP, but the trend line is our best friend that tells us, here's what, some news break over there and the market change trend, it is time to get out. The trend line tells you exactly when to get in and when to get out of trades. It gave me a confirmation. As I said, the strength meter gives you the confirmation. But once you do your analysis and you understand it, you can use the trend line and you can be successful on all of your trades. You know straight away when it goes back, yes, I can put my stop loss there because I can handle it. Even if it pull back up to that line, I know it wouldn't pull back up to the trend line. So it may go in some negative, but it's going to pull back. We always like to see blue all the time. But there are times, even if you're looking at blue, the red shouldn't be something that we should fear. Once you do a proper analysis, we know exactly when to enter the market. But again, as I said, all of the principles we can use. So for example, if I turn on the Bollinger Band, we can use the Bollinger Band here and it still follows the trend line principle. All of these things use the trend line so that they can get all the data to go ahead and do all the plotting of the charts here. And that's what it is in a nutshell. Here. All right, we've been on for a while. Any questions? Is there anything that needs to be cleared up, or we have anybody has any question on the throw in the chat?
Let me just show a quick one at you. Your back testing, you just always use back testing.
Yeah, the thing about what back testing does, back testing gives you an idea. Here's what, whether or not the strategy works. But back testing lets you know the points in the market. So you may do, let me just hide that here. You may do your analysis, remove drawing, and they say, okay, fine, this is a good point where we can make an entry here. But if you go further back, you can realize, here's what, when the price got to that point, sometime in the past, it reacted here. And that's what the back testing does. Because the currencies, they follow the same pattern. That's what happens. They follow the same pattern. So when you back test, in actual sense, what you're looking to see what happened when price reach a certain point. So look at this level right here. For example, if we decide to do a back testing here, look at that price level right here. Oh, this one up here, I like this one here. That level here. At this point here, we see price reacted at that zone here. It almost reacted on this zone here. Price reacted on that zone. Price reacted on that zone. We can go further back. This is a zone here. Look at here, right here. Price reacted on that zone. Right over here, price reacted. So when we backtest and we go back, we see the various zones that price reacted. So even though today we know that the current price is right here, let's find our current price. This is our current price here. What is important for us to find out here is what? Let me go back and see what happened on that previous zone, because we can as well say, okay, fine. Let's do some support and resistance. Let's do this one horizontal line there. Let's do another one at these two zones, right? So we have the prices between inside here. As you see, sometimes we want to trap price to see what's going to happen. So this is our zone here for wherever the price would have reacted. Okay, I see a better example up here. This is a zone. We had a few touches here. We had a few touches there. That's one zone. Let's move it up at that zone over here. So price would have been inside here for a while. We can go back to see the history, see what would have happened. Look here again, price made some resistance here. Again, we have it here. So price is within that zone. A lot of things happen within that zone. A lot of activity happen if we decide to back test and to go back. We see a lot of cluster within that zone. Some thin lines out of that zone, thin lines out of that zone. That's another zone up here. But we can see from the past, these things happen. So what would have happened here now? Okay, fine. So we had price inside here. This here is an area. So if we move that just up a little below where all the candles are touching right here. So that's the base of the candles here. Price was inside here. Price came up to that here. Price found resistance within that zone here. So the price hit here. The price didn't break that zone. The price continued to come down. This was a support for it here. But what happened? The price broke the support. And this is taught a lot on IM2. So the price would have broke the support. After it broke the support, it came and it retested, and then the price continued moving down. It came back up, it came close to the zone again, it didn't touch the zone, and it continued to go down. So we hear a lot about the break and retest. So we are trapping the price inside that zone here. The price broke to the zone, went back, retested on the zone, and most of the time when it exits the zone, it just continues right there. It just touched the zone for the retest. We call it pullback, and then the price continues. So this is going down. We know it is going down. It's some consolidating for a while here, but it's down, it's going to go. Even on the pullback, it didn't reach the zone, the previous zone. So we know that this price is going down. So what the back testing does, it just helps us establish certain points in the market where price reacted, which will give us an idea as to what we should do. Should we enter? Should we not enter? That's what the back testing, the purpose of the back testing. Because all the market behaves the same way all the time. Same structure in the market. The algorithm that runs the market is the same. It's just a matter of understanding it here. And this is why, as much as we can do whatever, the basic principle is the market goes up, it goes down. It contracts or consolidates for a while, then the market expands. When it expands, most of the time the expansion is done in the reverse direction. So look at this here. The market was coming down. It consolidated for a while. And the expansion is what we call the pullback. So we know it's in a downtrend, but when the consolidation is over, most of the time it goes, when it expands, in the reverse direction. So persons may see that here and they say, here's what, no, the market going up, let me go for a buy because it's going up. But really that's the expansion, and it takes all the money from people. And then the market makes it move in the direction which is going. This is why it is very important to trade with the trend. If you want to trade with and against the trend, you have to be scalping, and you must be using your trend lines. The trend lines is the only thing that tells you the market is changing direction. If you don't use the trend line, then you're going to long-term trade here and you say, okay, fine, I enter the trade and I'm going to leave it for it with my TP. I know it's going to pull back and it's going to do that. But if you decide today, I ain't taking no lash today. Once you break the trend line, I exit in the trade and I'm taking it in the reverse direction. And you can do that. So for the whole day, you can trade the GBP USD. Today alone, you could have traded the GBP USD. Here, on the pullback, you buy. It goes all the way up. It crosses the trend line here. You wait for it. You sell it, come down a little, you get 10 pips. Fine, you close. You pull back up. And whole day, you're up and down on it. That's if you have the time and you decide to scalp. And you do that in the 5 minutes time frame. Because an hour is not enough to do that. An hour is too much time. You can lose a lot in that here. But this is just to show you the power of the trend lines. And you use the trend line, follow it along, understand it, master it, and you can be very successful in your trading. It tells you when to enter, when to exit, and you do that and all should be well. All right, we've been on this for the last 2 hours. I think it's quite a lot for the night. I think it's quite a lot. But this applies to any currency pair we're looking at. Any currency pair. So this is a pair that has been giving me a lot of trouble from since Sunday. The market has just been going up and down, up and down. It spent all this amount of hours consolidating, went down, and it's going up. And that's also it's behaving. And this is a downtrend. on the major time frame, it's a downtrend. It just so happened that for the past few days, it just decided to just behave like this. But the larger time frame says it's a downtrend, and that's what's been going on.
That's called a flag pattern. I mean,
What's that?
that look as a flag pattern. I think I learned something that it could be like a flag. I think our next flag should be forming based on.
Oh, a flag. Oh, so you see the flag pole, and that's the pole here, and then you see the flags that are waving. They give them all kind of fancy name. All kind of fancy name. But at the end of the day, with all these patterns to remember, and people say, okay, this year, and then you have this kind of candle and that whatever. Once you understand the concept, however they call it, doesn't even make a difference. They still follow the pattern of the trend. Once it breaks the trend line, which is your guide, that's what it is. So it could be called flag, it could be flown upside down or standard way. They all still follow those things here. So the simplest form of trading and mechanism for trading is not fooling up your chart with all these indicators that tie you up. You have a clean chart like this and your trend line, you trap your price, you wait for it to break the zone and retest, and you do that. And once you follow that, you don't have a problem. That's in a nutshell, the whole essence of trading. And then you use, as I said, you use the currency meter to give you an idea. So two pairs that are sort of a volatile that are moving, gives you an idea. I could start to trade this pair because a lot of movements is going to be taking place. You don't want to trade pairs that don't have any kind of movements that is in consolidation. But you trade pairs that have movements. One that is very strong with one that is weak, you see a lot of movements going on. With this strategy, you master this, you are going to succeed when it comes to trading. But you have to learn to spend time with the trend lines and understanding it also. Again, all of the other indicators, they work. So I'm not condemning any of the indicators, but I'm saying the basic, like last night on the call I was saying, here's what. You could have what kind of vehicle? You could have a Corolla, you could have an RD, you could have a Tesla. Driving is the basic principle. You have your steering wheel that makes you go left and right. You have your brakes to slow down. You have your accelerator to press to go. It don't matter how inside it look, what design, what features they put. The basic thing about driving is your pedal to mash to go and stop and your steering wheel. Bottom line. All the other fancy thing they put in it, that's fine. But what is foundation is the pedal and the steering wheel. So all the other indicators and all these things that is being done here, the market goes up and down. You need to know when it's going down. And what tells you it's going down is when it passes a certain mark, trend line is what it is. So we follow the other indicators, we subscribe to things, and we do that, and we learn the other indicators, which are good, very well. But if you master the trend line, it makes it a lot easier for you. Because the thing about it with many of the other indicators, although they work, they are a little bit late. You get on and you look at if I were to turn on the Bollinger Band, for example, on this here. Okay, we told, okay, fine with the Bollinger Band. If we see the moving average, if it gets out of the band, we know it's pulling, it's moving to that direction. But many of the times, those things, when they happen, the trend moves after these things happen. So they're not spot on. So yes, you can see them and you can say, yeah, well, look at it, it's successful, it does that. But many of the times, it is later than the time these things happen. So look here, for example, we have this moving average here. It shows that the price is consolidating towards the middle here. When we see it take a dip down here, but look at it, even though it took a dip and realize it's going down, that time, so if it dipped right here, look at it here, at this point here, that time the market is already down here. Although it shows you high up here, but this point really represents the market down here. So if you got in here for confirmation, or the Bollinger Band say I should sell right here, let's see, you would have already lost how much pips? 246 pips. You would have lost. Look at it right here, you would have lost 246 pips by the time this Bollinger Band tells you we are going for a sell. But if you had drawn your trend line, you would have gotten at least 230 pips. So yes, those things are accurate, but they are a little bit behind. They lag a little. The latency on them is a little bit kind of high. So it shows your accuracy, but the time you get the information, it is way, way, way too late. So look, I just come and see the Bollinger Band say we're going down for a sell. So I'm going to get into it here. But here's what. Right where this cursor is here. By the time you see the Bollinger Band going down, we're already in the uptrend. Look at this. This cursor right here. This is the candle for it. The candle going up. But look at the cursor reaches at that point here. So we can see that these things are way behind. As a matter of fact, this Bollinger Band is 1, 2, 3, 4, 5, 6, 7, 8, 9 hours late. So it's showing you down, and you get in for a down, and then it pulls back. It's going to go down a little, you will make a little peep, but not enough that you would have made if you had decided to use the trend line. I hope that makes some sense to you. All right, so I see one more. All right, thank you. Thank you for that comment here. Yes, TradeView is available for everyone. You go to tradeview.com and you just sign up for TradingView, tradingview.com, and you sign up for an account. And here's what. The good thing about it is that all the markups that you do, it stays on your account. So all these lines and all these things that are drawn here, it stays on the account. You can color code your currency. So you know, every time I have a currency being traded, I just give it a color. So we can color code it so it stays. So all your analysis, when you do it here, it saves. So if this analysis here, this line is drawn for the Euro NZD. If I switch to the GBP USD, the markup we had on the GBP USD here still stays. So you can mark up all your currencies, and whenever you come back to them, it stays just as it was. So this is one of the advantages of this here. But also what I like about this is, so fine, I know this is going on a down trend, but this is at a consolidation zone. So here's what, let me put an alert for here when it breaks that zone. So I right click and I just add an alert here. And I can give a note and say here, okay, it says GBP crossing that. So once I get that alert, I know here's what, it break that zone, time for a sell, I just put a sell on the account, on the trading platform. And this is what TradingView does. So you just register for a TradingView account and you can be well on the way to doing all your analysis from inside here. And you just move over to your trading platform and you trade and you execute your trades on your trading platform. All right. So if nothing else, I think we can call it a night here on this. Again,
Paul,
yes.
Before you go, can you show how to integrate your trading platform to TradingView?
Okay. So if you, let's see the list of brokers. Let me just see that. Okay, somebody was just asking something here before I show that here. Not a problem, Ms. Duncan. Good. All right, so if I look at trading panel, let's see what happens on the trading panel. I can bring that up here. Right. So if I go to the bottom, the trading panel, it says choose your broker and log on to your broker account. All right. So there should be, where it is. So I'm not using this broker here. So that's Papera Trading here. I can connect to him, them if that's my broker. But there is a way. Let me see what this option here. Oh, good, right. So it was hiding down here. These are the list of brokers that you can integrate into TradingView. And I really wish my broker was in here, which makes it a lot easier. So these are the brokers that can be integrated into TradingView. So this here is FXCM. Or that's trading station, that's FXCM all here. So you can connect here. So if your broker is in the list here, you can connect them directly to TradingView. And when you connect them to TradingView, you could actually trade from TradingView. For most of us, we can only just do our analysis in TradingView, and then we go to our regular MetaTrader, and we place our trade from MetaTrader. All right.
Nice, thank you.
Yeah, not a problem. So again, I thank everyone who is on the call here. And the whole thing, which it's about practice and practice and practice. And we're going to keep doing that, keep doing those here. The next session, we're going to do session with some of the other indicators, be the Bollinger Bands and other so. But here's what, trading is very simple. We can have some educators who and persons who try to make it feel okay. Well, they're always so educated and there's so much to do here. But it is a very simple thing. This is a simple strategy. And once we master this strategy, we can all become independent traders. It is not as difficult here. It is not as difficult as we may think it is here. It's just a matter of mastering this. So our next session, we can do a live, just as how we used to be doing like in the morning, the early trading session. We can do from like 8 in the evening, the same time we start here. The market moves around that time, some of the market. So we can maybe say, here's what, let's do a live trading session. So we can practice what we learn, we can draw up the charts and we can wait for a call and we can do that session also. It's just a matter of practicing so that we can become perfect on it. All right. So once again, I thank everyone for tuning in, and I'm longing for the day when this whole Corona thing would end, where we can actually meet face to face and as we were doing before, because if it wasn't for that Corona thing here, I'm sure everyone else who is on this platform would have been far further than they are presently. But again, it's a good learning experience for us. And at the end, when this thing is over, we're all going to be proficient traders. And again, our commitment that where we would have started, we plan to get everyone to the end of the journey, and we are going to do that. So virtual now, but when we resume, we're going to be resuming physically, and we're going to ensure that everyone will be at a position where they can independently take trades and be confident in the trades that they take. All right. So once again, have a good night, everyone. And we are going to resume early next week. You know, Fridays are off for me. Friday is Sabbath time, so I don't get involved in trading or in those kinds of activities or any calls on the weekend. So let's see what happens on Sunday and Monday in the week coming. But we're going to try at least to do 2 or 3 calls in the coming week. Trading, we're going to have a live trading session also where we can place trades and we can do that. But we're going to do a lot of practice. So once again, good night to everyone, and I'm going to post the link so you can look over the videos for anything that you would have missed, and you can have your questions. So next time we get back on, you can post your questions. So have a blessed night, everyone. Thank you.